how are you guys doing? What a crazy week on the stock market. So much red. I don't remember the last time I saw this much red on the stock market, but I'll tell you what, it's not all bad. It is, well, we are kind of knee deep in the middle of earnings season. And like I said, it's not been all bad. There are some companies putting out some really strong quarterly earnings, three of which we'll be talking about in tonight's Dividend Happy Hour. We're going to go through just a little bit of an overview of these three companies, what they reported in their call. I'll give you my take on them. Two out of the three are ones that I personally own in my portfolio, and the third is one that I've been looking at for a long time. A long, long time, and I've really been wanting to add it. I've kind of been watching it from afar. But anyway, before we get into any of that, welcome to another Dividend Happy Hour. I'm so stoked to be back with you guys for another week. Hope you guys had a fantastic week. We got to kick it off with a cheers. And look what I got, guys. Look what I got here. You guys know what this is. We're finally, I know I've kind of left you guys hanging these last few weeks. I've been saying I'll bring a margarita on the stream, and I have not, but I am delivering tonight. Got myself a little bit of a marg. But hey, let's kick it off with a quick toast. Okay, why don't we cheers to, I decided I'm just going to start coming up with these toasts on the fly. I think it's better that way. So tonight, guys, we're going to cheers and raise a toast to Johnson & Johnson under $150 a share. We're going to toast to Lowe's dipping down to the low 180s. We're going to toast to Realty Income under $50 per share. We're going to toast to all of the great discounts out there. Those three and the many more that I know you guys have your eye on. So here's to that. Here's to all these buying opportunities. Great opportunity to swoop up these shares at a discount and create that cash flow, as I like to say. But anyway, here's to that. Let me know a few things here in the live chat tonight, guys. Number one, what are you sipping on tonight? What did you bring tonight to drink? You can't leave me hanging, guys. The one night that I do bring a margarita on the stream, you cannot leave me hanging. So let me know what you're sipping on. Number two, let me know what you bought this week. As we've talked about, so many great deals and discounts out there right now. I want to know what you guys are buying, what you have your eye on. And number three, did anything cool happen in your portfolio? I would guess this week we're not hitting any new portfolio value milestones on the high end, maybe on the low end for some of us. But yeah, let me know if anything else cool happened in your portfolio, maybe any income milestones, anything like that. Let me know what's going on in your portfolio. I'd be curious to know. And while you guys are sharing all of that, let's, I want to go through the live chat real quick and just say what's up to everyone here tonight. I see Luis. What's up, Luis? I see my man Chris, who sold out of PSEC this week, he told me. Good move. Charles, what's up, Charles? I see Anthony here. I see Adon, Tommy. We got Dave Trade in the building. Good to see you. All the way from the United Kingdom. That's awesome, man. Thank you for tuning in tonight. What time is it over there? I bet it's pretty dang late over there. So yeah, props to you if you're staying up late watching the Dividend Happy Hour. I'd rather be sleeping, but anyway. But who else we got? Paolo Angel, what is going on? Says I could use a happy hour. Been a cruddy day. How's everyone doing? Well, Angel, first of all, happy to see you in the stream. I hope this turns your day around. I think we're going to have some fun tonight. It's always fun tuning into the Dividend Happy Hour. I have a lot of fun doing these. I hope you guys have fun watching them, and I'm really sorry to hear you had a bad day, but hopefully this turns it around, or at least, points it in a different direction for a little bit. We got Amadou here. We got Tommy. I said, what's up, Tommy? You get 2 shout-outs from me tonight, Tommy. The investor guy. What's going on, man? Sean. What's up, Sean? Finally made it for a live. That's awesome. I'm stoked to see you here. I'm glad you made it. We got Joyce, who says, hit the like button as you come in. That's right, guys. We are already up to 113 people in the stream tonight. And, 110 now. We lost a few soldiers there. But, yeah, if you haven't hit the like button and you're enjoying the stream, or if at any point you start to enjoy the stream, please hit that thumbs up button. It'd mean a lot. Anyway, we got Will here. We got Coach Tim, who says, raise a glass. Love to hear that. Jeff, cheers. Went crazy this week, and dollar cost average down on Walgreens, Deere & Company, Vici Properties, PSA, which is public self-storage, I think, and then Johnson & Johnson. Nice. We got Charles sipping on some Coca-Cola. Very nice. Mountain High, what's going on? Ren? Oh, nice. High fives all around. Greetings from Chicago. Nice. Let's see. Yeah, Louis says Lowe's is getting so low. It sure is. Personally, I picked up some Lowe's and some Johnson & Johnson this week. This is my first time buying Lowe's in a little bit. Just been waiting for it to get down to, I guess, where it is now. Johnson & Johnson, it's kind of been the same thing. That's already one of my bigger positions, but, good one to take advantage of right now for sure, so you got to do it. We got Luffy here, who picked up some Realty Income and Aries Capital, stacking that income. Ethan W., is that what you bought this week, or I don't know. But anyway, what's up, Ethan? Chris here. SHD, Realty Income, Johnson & Johnson. Wow, look at all this. Look at all these guys. I would imagine tonight we're going to see a lot of Realty Income, a lot of J&J, a lot of Vici. Kind of seems to be the trendy one so far. We got Fabio in the building. What's up, Fabio? Elon Musk. Nice. That's pretty good. Good stuff, man. Happy to see you here. There we go. Louis says, cheers to that yield going to the moon as the portfolio is deep in red. Yeah. I'll tell you guys what. This is my portfolio right now. I'll just show you real quick. My portfolio right now is down quite a bit more than I've seen it in a long time. I don't know that I've ever been down this much in the portfolio. Down 4.5% overall, down about $2,400. Honestly, I don't know about you guys. I don't know. I'm sure some of you guys are down less than me. I'm sure some of you guys are down more than me. I don't know how you guys are feeling, but I'm still sitting pretty comfy. Feeling okay about it all so far. So just got to keep rocking with it. Got to keep buying, and just got to keep the faith. Anyway, who else we got here? We got, let's see, Joyce is sipping on some Merlot. Very classy, very classy. Let's see. Jeff, very nice. Captain and Diet in my glass. Love that. We got Mirko here all the way from the Netherlands. That's crazy. Thank you for tuning in. Ooh, Elon Musk bought some shawarma. Nice. I love me some shawarma. So there's a place right around the corner, like right down the street from where I live here in Vegas called Parsley. And it's kind of like a Mediterranean Chipotle. And they've got just chicken shawarma. It's so good. Go there and get these chicken shawarma rice bowls with some pita bread. Get some feta on it. Man, sounds good. Yeah, reviews you can use got smoked. Yeah, didn't we all? Didn't we all, my friend? Let's see here. Let's scroll down. I see Greg. What's up, Greg? Hello from New Zealand. Very nice. We got Dorte, Pepsi Max. Didn't buy anything this week. Okay. Josh says, sipping on flavored water. It's only 2 p.m. in Hawaii right now. Wow. So are you on vacation in Hawaii or you live in Hawaii? What's happening in Hawaii right now? What's going on over there? Let's see. Very nice. Hans says, Sierra Nevada Torpedo. My birthday today. Hans, happy birthday. That's incredible. I'm honored that you decided to spend some time with us tonight on your birthday, and stoked to be able to celebrate it with you. So happy birthday. I hope you had a fantastic day, and I hope this is a nice cherry on top to a good birthday. So anyway, happy birthday, man. Let's see who else we got. We got Osvaldo. What's up, my man? Happy to see you. Let's see, Dominique. What's going on, Dominique? Picked up some VU Classic, some Main Street Capital Corporation, and some ABR, which is Agree Realty, I think, right? Or Arbor Realty Trust. I think it's Arbor Realty Trust. I think I get those tickers confused. Yeah. It's Arbor Realty because Agree is ADC. So let's see. Let's keep going here. Say what's up to... I said what's up to Michael already. If not Michael, what's going on? Pizza Pro made it. Good to see you. Pizza, I feel like I haven't seen you for a while. I hope you're doing okay. Happy to see you tonight. Christian here, nice little shopping spree. SCHD, VIG, VYM, all the ETFs. Apple, Microsoft, Costco, wow, Visa. Visa announced a pretty solid dividend raise this week. Actually, Vici did as well, right? Vici announced a pretty solid raise. And one of the companies that we're actually talking about in tonight's video announced a very substantial dividend increase. I'm excited to tell you guys about it. Let's see here. Let's keep going here. I see Burn Survivor picked up some Home Depot. We got Andrew G, the one and only. Good to see you, man. Thanks for tuning in. Jake, nice shopping spree here, Jake. Lowe's, Starbucks, Google, and looking at Ford. Okay. Let's see here. Dave Trade. Okay, over in the UK, it is 1 a.m. right now. Wow, that's wild. Good stuff. Dorte, it's 2 a.m. over in Denmark. Wow. Let's see. Mountain High had a nice little shopping spree as well. GLW, which is that Corning, I think, right? We have Realty Income, Agree, lots of Agree Realty, it looks like. Yeah, Bristol Myers Squibb, and then some more Agree Realty. That's funny. Tony, what's up, Tony? Picked up some T-Row, Altria, SCHD, and DGRO. Nice buys this week, my friend. Very nice. We got the Lean Mean Dean Machine in the building. Picked up some Coca-Cola and some RTX. Good stuff. And we got Dividend Rob, who made it. Rob, good to see you. Also, Rob, thank you for the, I think it was pretty recent, the recent little shout out there on Twitter, I think. Thank you for that. I really appreciate that. I'm happy to see you tonight. We got Sean, what's good, Ryan, from Austin, Texas. Nice. Nice, John. You know who else is from Austin, Texas? My man, Harris, who I don't think is watching tonight, or at least watching yet. Harris, if you're here, reveal yourself. But he's over in Austin. And also Jake from the Dividend Growth Investing channel. Great channel. I highly recommend you watch it if you're not already. He's over in Austin as well, I believe. Let's see here. Let's keep going. Sharon, 11 a.m. in Melbourne. Melbourne. Very nice. Okay. Is it 11 a.m. Friday or 11 a.m. Saturday? I'm guessing, yeah, because you're east from the States. It could be west, depending on how you look at it. I don't know. Are you Saturday or is it Friday there right now? I don't know. So, let's see. I see Kevin, Jimbo. Nice little shopping spree there for Jim. RTX, Energy Transfer, Enbridge, Merck, NextEra Energy, very cheap right now. And Agree Realty. Okay, Agree's kind of a popular one this week as well, it looks like. Okay. Yeah, Wes, I'm a little bit late, but I'm here now so you can start. Okay, thank goodness. We were sweating there for a moment, wondering if you were going to show up. Good week. Good thing we didn't have to, cancel the stream or anything. We got Kevin Burgess. Always happy to see Kevin here. Kevin, I hope you're doing well. Hope you had a good week at the beach this weekend. Glad to catch the live stream. I'm happy to have you. And also, guys, Kevin, I saw it in the Discord earlier this week, stacked up on some Kilroy Realty Corporation tonight, which I'm just going to spoil it, is a stock that we are covering. And you guys know what that means. If we're talking KRC, there's going to be a lot of drinking because that is part of the Dividend Happy Hour drinking game. Those are part of the rules. You guys can see the rules to the drinking game in the description. But, every time we bring up KRC, and you don't have to do it every single time I say the ticker or the name, but got to do it at least once. Anyway, let's keep going here. We'll go through a couple more. I just want to get caught up in the live chat, and then we'll get into the main event. I want to say what's up to Jonathan here, who said, how's it going? Been buying up some realty income and more Jeppy as well. Okay. Hey, Jonathan, good to see you, man. Thanks for tuning in tonight. I'm happy to see you here. Okay, nice. Osvaldo's getting his steps in as he's watching. Good stuff. Good for you, my friend. Get that cardio in. Help those dogs get their wiggles out. Let's keep going here. I'm like 6 minutes behind in the chat, so I'm gonna scroll down a bit. We got Yeah Man, AK Willie. I'm just gonna say what's up to everyone I haven't greeted yet. Journeyman, good to see you. Josh, Wesley. Wow, holy cow. Purchased 273 shares of SEHD. Good job. That's crazy. Harsha is here. Who else we got? Iceman, new to the show. I have a question. Every time the ex-dividend date comes, it always seems the stock goes red negative. It happens to me like 98% of the time. Do you know the reason? I do know the reason, and I'd love to tell you about it later on in the stream. So if you hang out for a little bit after we get through this main spiel, bring this question up again to me, and I would love to discuss it and try and shed some light on that. Sam Clark. Hey, Sam. Thomas Brendelson. What's up, Thomas? Hope you guys are doing well. Well, Luis kind of just spoiled it for me. But yeah, this is pretty much it. So it's because the dividend declared that it's reduced from the stock price, and some people do dividend harvesting after the ex-dividend date. So yeah, well said, Luis. That's pretty much it right there. Uh-oh, Jeff in the building. Yo, yo, yo. It's been a while. How is his brother? Brother's good, man. Hope you're doing well as well. Stoked to see you. Hope you're doing good. Let's see. Okay, see if I missed anyone here. World Through a Windshield. Good to see you. Billy. Cool. And it looks like we're all caught up in the chat, guys. So there's 100. Oh, Be Still. Good to see you, Be Still. So for those of you who are just now kind of joining the stream, I know you saw the title, you saw the thumbnail, but we're going to be going through 3 dividend stocks who reported earnings this week and last week, actually. And all of them put up some really solid numbers. 2 out of these 3 companies I actually have in my portfolio. I already revealed one of them. It's going to be KRC. The third company is one that I do not own, but it's one that's been sitting on my watch list for some time. So we're going to go through that. We're going to just take a look, the high level stuff, see what the earnings look like in general. I'll give you some of my thoughts on it. And I'll even show you a little bit of my notes as well, just some of the notes I've taken on these calls, and show you how I do that. And then I'll also show you, a little bit more about each stock, and then we'll get back to the fun stuff. But anyway, guys, the first stock, yeah, you guys aren't probably, well, I don't know, actually. Do you think you guys could guess the first one? So this first one, guys, is the one that I do not own. It's the one that I do not own in my portfolio, but it has been on my watch list for a while. I've talked about it quite a bit. I mentioned earlier that it has announced a really killer dividend raise. Do you guys have any guesses as to what this stock is? I think some of you guys will get it. But this question may be a little bit out of left field, so I don't know. But I'm curious to know, any guesses as to what this first stock is going to be that we're talking about? Okay, I see Shutterstock. That's a great guess. Ooh, wow, a lot of good guesses. AMT, the railroad company. Yeah, good guess. AbbVie, Visa, AbbVie, Shutterstock, Rollins. Okay, yeah, I see more Rollins, Visa. Yeah. And actually, remind me to talk to you guys about Shutterstock later. Nothing crazy, but just remind me. So the company that the first one that we're talking about is going to be Rollins. Now I'm going to jump over to the screen, guys. I'm going to hide the chat for a bit. Jump over to the screen. Yeah, this first one is Rollins, who, like I said, put out some really good numbers. All three of these companies beat on both the top and bottom line. So don't be surprised when we see that for each one. But anyway, high level stuff. Earnings beat by 3 cents, brought in earnings per share of 28 cents for the quarter. Revenue was really strong. So revenue in general was up 15.2% compared to this time last year. So really strong revenue growth, and they beat analyst expectations by 14 million. So that all looks pretty dang good. Now, I want to go through just some of my notes that I took from Rollins. These are kind of the takeaways. If I had to just really sum up the takeaways for me from this company's earnings, it'd be this. We already talked about the revenue, really strong revenue growth. Okay, in addition to growing on the top line, as we kind of make our way down the income statement, looking at the gross margins, this looked really good as well. Gross profit was up, and in fact, the margins expanded compared to this time last year. We're looking at a 54% gross profit margin for Rollins as of this quarter, which is a pretty competitive margin, really strong gross profit. And if we go all the way down, looking at their free cash flow, this is where it starts to get really sweet. So year to date, they've brought in $354 million of free cash flow, which is a pretty hefty sum. But this is also an 11% increase year to date compared to this time in 2022. So for the first 3 quarters in 2022, they brought in 11% less than they did this year. And I said that in a weird way. I apologize. But you guys get the gist. And in the process, they did not forget to return some value to shareholders. So like I said, they announced a huge dividend increase in their earnings announcement, 15%. Love to see that. And that's pretty on par with this company's 5-year average dividend growth rate, which we'll take a look at in just a moment. But in addition to the dividend growth, they completed $300 million in share buybacks throughout this last quarter. And it's not necessarily a bad time to do so. I mean, we'll take a look. Let's go just take a look at some stuff on Seeking Alpha. So we can see, actually, no. Here now we can see. And I'm sorry that there's so much blank space over here, guys, because I'm on my desktop. It's just kind of wonky, but it is what it is. Anyway, so in the last year, we can see that Rollins is actually down. They're down 13% year to date, barely in the red. And then in the last month, they're down about 3%. But they would be down more if it wasn't for their earnings. We can see that right here they dipped. This might have been where they reported their earnings, actually, right about here. I can't see. Oh, no, they reported earnings yesterday. So I don't know exactly what it was that made them drop so much here. But anyway, they did. So they fell off a cliff right here and then rebounded after reporting their earnings. But anyway, going over to the dividend stats, guys, this isn't going to be the highest yielding company. Okay, the forward yield is 1.68, which because of the share price drop is higher than it historically has been over the last 5 years. So you're getting a little bit of a more decent cash flow return buying at current prices than you historically have been able to. Payout ratio, a little bit on the high end, okay? But, 60%, that's still manageable. One thing to keep an eye on, the 5-year growth rate, and I actually want to dive a little bit deeper into the payout ratio in just a moment. We'll take a look at that. But like I said, guys, 5-year growth rate, about 17%. So the recent announcement was right on par with that, a little bit below, but 15% dividend increase is nothing to turn your nose at. And they've been growing this dividend for the last 2 years. But with that, if we look at their dividend history, according to this, they've been making payments for 3 years. And if we zoom out, just look at the dividend history chart. Aside from 2020, this company's been a pretty solid dividend grower, and it looks like they've even initiated some special dividends along the way. Like pretty consistently, it looks like at least once a year they're doing special dividends. So the dividend track record goes back quite a long time, and it's been pretty solid throughout this entire timeline. And anyway, in regards to the payout ratio, going over to the income statement here, I just want to see how this has trended over the years. So about 10 years ago, I mean, we don't even have to look back 10 years ago. We can just kind of look at this chart. We do see the payout ratio trickling up as time goes on. So it looks like they are increasing their dividend payout over time. So like I said, where it's at now, about 60%, according to the dividend scorecard page, it's not. I mean, it's not a deal breaker in my mind, but it is something to keep an eye on when you see it go up. Something to keep an eye on for sure. But at the same time, like the company's been buying back shares. I don't want to say pretty aggressively, but they have been. Like I said, they just completed a $300 million share buyback. So, and maybe that's not reflected here quite yet. But anyway, otherwise, the company's been very strong. Looks like they're firing all cylinders. If we just scroll up and down the income statement, we see really strong growth. You know, like I said, the profitability has been pretty nice, mid 50% gross profit margin. So I think there's a lot to like about Rollins. And if we go back to the share price performance real quick, it's currently sitting about $36 per share. Okay, it's down 13% in the last year. You know, recently, where was it? Where was its recent low here? If we go, looks like the recent low was just under 33, actually closer to about $32 per share. I was kind of saying, I was talking to Russ and Harris about this briefly. I was kind of saying, you know, if Rollins gets to $30 a share, I actually have a price target set for $30 per share. If it got there, I'd really seriously consider pulling the trigger on it. And if you look at certain metrics, like if you go over to alpha spread, they're going to have the intrinsic value a bit lower, like I think in the mid to low 20s for Rollins at a base case. If we look at the PE ratio, it's 40, about 40, so it's a really high PE. But at the same time, this company's seen a lot of growth. But anyway, long story short, I told myself, you know, if it gets to about $30 per share, this is when I'd pull the trigger on. So when it went from, you know, low 32 range to now just over 36, you snooze, you lose, man. But who knows? Maybe it'll, you just never know what can happen. Maybe it'll dip back down. I've seen it with KRC, the next stock we're going to be talking about, where, I mean, it's at $28 a share now. I've seen it get up to, you know, $37 a share like that and then make its way back down yet again. So really anything can happen. We're in a pretty volatile time on the market. I guess really, you know, every time is, or any time is pretty volatile, but I'm going to keep my eye on Rollins, kind of looking at low 30s. You know, it's kind of what I'm looking for. If it gets back down to about 30, I'd really consider adding this to the portfolio. I just think it's a rock solid company. And I actually think it's pretty slept on by a lot of people. You know, I don't hear a lot of people buying it. I don't hear a lot of people talking about it. Maybe that has to do with its valuation. But I think the company at the very least deserves a look through. And if you guys ever get the chance to look at it, I'd be curious to know your thoughts on it. Because like I said, I think it's a pretty solid company. So anyway, that's the first one. Really solid earnings from Rollins. This next one, did you guys see that? You guys see who made an appearance? It's time to, we got to take a drink. When Peanut makes an appearance, you know how it goes, guys. Let's see what I missed in the, here in the chat real quick. Summoning his inner PBC Ian, but no 3M tablet. Yeah, that's from a few minutes ago. See what I missed here. Okay. Here we go, guys. Let's move on to the next one. So KRC, and you don't have to drink every time I say it. Dominique says debt on Rollins. That's something I actually meant to bring up. So, I'm talking about Snap-on. Let's take a look at Rollins' debt real quick before we move on to this. And yes, the free cash flow is increasing. That's what I kind of shared that earlier. But let's look at the free cash flow real quick. You can see, look at that. This is the levered free cash flow right here. Really strong upward trajectory there. Balance sheet. Debt's pretty manageable. So net debt's actually been going down, as we can see from this chart here. And total debt as well, obviously. But yeah, debt's been decreasing. Prior to 2018, they were negative on a net basis. The debt was negative on a net basis. So yeah, I think it looks pretty solid in both of those departments. But anyway, let's move on to the next one, guys. This next one is KRC. Let's go back over here. Bear with me. Sorry, guys. A lot of back and forth here. So you guys can see it. So KRC, FFO of $1.12, beats by 5 cents. So a little bit of a beat there. Revenue was up about 3% year over year. They beat the revenue, their rental income, by about $6.5 million. So, and with that, guys, as we'll see in just a moment, they updated their FFO guidance for the full year. I'll show you guys that here if we switch over to my notes. I have a little bit more notes with KRC than I did with Rollins. Now, the thing that you need to watch out for with KRC, obviously they're an office REIT, so offices are pretty out of favor for obvious reasons. And so one thing to look for is how is How is occupancy? How is leasing trending? What's going on there? What's demand look like in the markets that they operate in? And sorry, I'm getting distracted. No, Jim, don't worry about it. I said it once. Don't feel like you need to keep doing it. But I see B still rapping there. But anyway, back to KRC, guys. Going back over here. Sorry. Let's take a look at my notes. So it's in terms of demand, in terms of occupancy, across most of their markets, it's looking like it's heading in a better direction. So overall, management is seeing increased demand in their markets. San Diego, their occupancy is up 20%. San Francisco, the demand, not necessarily occupancy, but demand has doubled since Q1 2023, largely driven by AI. And I have some more notes on this over here. So if we go here, we're actually going to go over to, this is what I use to take notes, guys. Hopefully you guys can see it there. Might be a little bit of a delay, but over the last few months, this is the second quarter that I've done it now. All of the earnings calls that I listen to, I have just tried to write things down. I figure it would help it stick more, and just anything that seems notable to me, I'm just kind of taking notes on it and do it here in this. This is part of my dividend database that I've kind of been talking about. But anyway, in terms of San Francisco's demand, so in the earnings call, they said starting in Q1 of 2023, we had about 2.5 million square feet of demand. It's more than doubled now to about 5.5 million. That's largely been driven by artificial intelligence. And later on in the call, they kind of touched on this a bit more and said the way that I look at the San Francisco market is that there's about 800,000 feet of AI demand right now. And what's interesting about that is probably since the Q2 earnings call, I said the average tenant size was 5,000 square feet for artificial intelligence. So those companies on average were looking for space about 5,000 square feet. It's now tripled to 15,000 square feet. So the demand and the requirements for these companies are increasing. And so what we're seeing in our portfolio is a sort of mix of AI interest, as well as there's a lot of law firm activity in San Francisco and also some professional services. So that sounds pretty strong. Seattle didn't appear that it was as strong, the increase in demand. They actually referred to it as a tale of two cities. So in general, in the greater Seattle area, their properties demand, I think, was on the decline by actually quite a bit. I don't have the exact number, but I remember it seeing it down maybe 3 to 4% year over year, somewhere in that range. But outside of Seattle, there's a town called Bellevue, and they have some real estate there in Bellevue. And this was a complete opposite trend as what they saw in the greater Seattle area. So here we go. Seattle stands to benefit considerably from AI because it's got the second largest concentration of talent behind the Bay Area in the country. So that's a very positive thing. Unfortunately, it hasn't resulted in an uptick in significant demand in Seattle. By contrast, Bellevue big tech is back. We're seeing a lot of gaming companies with two large requirements. Particularly, they are both over 400,000 square feet. That's a lot of space. So we think Bellevue is really improving, and a lot of that is not going to sublease space. That's going to new development. So overall, kind of mixed news there in terms of Seattle, but there are other markets. Seattle, I think Los Angeles as well is increasing, not as much, but Seattle or San Diego and San Francisco all seem pretty positive. And furthermore, in these cities, one of the things that the manager or the CEO, excuse me, did touch on was the policy changes he's noticing. I noticed I don't want to say he gets political in the calls, but there's a little bit of those undertones here and there. But anyway, going back to my notes, he said many of the cities in which KRC operates, or this is my note, are starting to see a change for the better from a policy perspective. Recent data points, according to the CEO, demonstrate that they're self-aware of the issues facing the city, and the policymakers and voters are taking steps to correct the issues. So things like hiring more officers, increasing their pay, so incentivizing people to actually become police officers. City's Board of Supervisors approved delays to payroll tax and discounts for businesses relocating to the city. So they're trying to get people to come back, use the space. They want it to thrive again, because over these last few years, it's certainly not. For multiple reasons, just demand for office, and also just, you guys know, we don't have to get into it. But anyway, going back to my notes on KRC here, some other things I wanted to talk about. The last thing really is overall, they updated their full year FFO guidance from $4.48 per share at the midpoint to $4.58 per share to the midpoint. So thing about KRC, the sentiment for this sort of real estate is so down and has been for a long time. And that's partly why the share price has been so compressed. And we can look at other interest rate environment and stuff like that, obviously has been a catalyst too, as has been the case for pretty much all real estate investment trusts, right? So KRC has been impacted by that as well. But overall, if I had to sum up the earnings call and management's take on it in like one sentence or two sentences, it'd be this right here. Overall, the trend is positive. It's just going to take time to sort out. So overall, it seems like things are trending in the right direction. They're still putting up good numbers, still seeing growth, and occupancy has been overall pretty steady. Some markets like Seattle, maybe it's gone down some. Other markets like San Francisco, LA, San Diego, we've seen it go up some. So it's a fluid situation, obviously, but that's pretty much what's going on with KRC. And one other thing that I did want to touch on is the CEO, John Kilroy, is going to be retiring, I believe, at the end of the year. So they did touch on who's going to be his replacement and what that's going to look like. If we go back over to my notes here, with respect to our search right here, guys, with respect to our search for the next CEO, we're entering the home stretch. We've been pleased but not surprised to see the opportunity KRC has attracted. The opportunity at Kilroy has attracted many qualified candidates, both internal and external. So no news. They're making development, and by the end of the year, they should announce, hopefully, a new CEO. So, and this is kind of interesting, too, before we move on. This is the last thing before we just take a look at the share price, dividends, stuff like that. So in regards to the demand for office, because you got to ask multiple times in different ways about, what do you think is going to happen with offices moving forward? Are you seeing people come back? What's kind of that trend look like? And so he said with the companies right here, with the companies that we're talking to, most, if not all of them, have factored into their performance reviews physical presence in the office. So you're seeing a lot of the companies, at least the ones that they're talking to, placing importance on being physically present. Anyway, and that results in your pay being affected if you're not coming into the office. And that's sort of across the board with the tech companies that we deal with. And that's kind of the meat they're putting into it. And I think some of the others, I won't name names, but some of the others have basically said, if you're not in, you're not working here. So it's definitely forceful, and it's definitely, this is complete the sentence. If you use San Francisco, as a proxy, parking revenues up the streets. Parking revenues are up, the streets are busy, literally Monday through Thursday. Friday's a bit lighter, but it's busy most of the day throughout the day in the financial district. And I'm so sorry I butchered that. I definitely can't read tonight, apparently. But let's go over, take a look at some of KRC's. We'll take a look at their dividend stats. We'll take a look at their share price performance. It's not been great. And we'll even scroll briefly through their income statement because, like Roland's, a lot of very consistent growth from KRC, despite the headwinds they've been facing, not only just over the last 10 years, but even over the last few years. We'll look at it on a quarterly basis so you can see how that's been trending as well. But let's go over here, guys. So year to date, KRC down about 28%, let's call it. So definitely some poor share price performance. And this one has been quite the roller coaster, guys. It's been down, it's been up a little bit, then back down, and it's been up again, and then down and up and down. It's just really been all over the place. And in the last month, they're down, quite a bit, about 13%, well, 12.6%. Let's not exaggerate too much. So definitely took a big hit in the last 30 days. And since they reported their earnings, it looks like they reported their earnings yesterday as well. I'm just tripping. So right about here is really where they started to see this downward trajectory. But, as we go over here, taking a look at the income statement, okay, let's look at it on a quarterly basis, just to see, top line and FFO, how that's been trending. So we can see since March of 2021, it's still, we're still seeing some positive movement here, positive up and to the right. So still growing. And if we go down, look at their FFO, their funds from operations, this is going up as well. Where's the FFO per share? So right here, yeah, FFO per share, it's kind of up and down, but overall, we're seeing some movement in the right direction here. But that's not to say you're out of the woods yet. So, like they said, overall, it's trending in the right direction. It's just going to take some time to sort out. I don't know, keep an eye on it. Definitely keep an eye on it. And in terms of the dividend stats right now, guys, it's looking pretty sweet. So 7.76% yield. So this is definitely a high yielder. And I don't know if I guess it will. So look at their 4-year average yield, just under 4%. So their average yield across these last few years is a lot lower than where it's sitting at right now, which is no surprise when you consider they're still making dividend increases and the share price is just down so much. So quite a spread between the average yield and the current yield. Furthermore, their FFO payout ratio historically has not been too bad. I mean, right now, it's under 50%, about 48%. That's a very comfortable FFO. So the dividend is still well covered, not, at least just based on this, not in any risk of being cut. Anything could happen, but still just based on this number here. 5-year growth rate's not too bad, especially when you consider how high the yield is. So with a near 8% yield, we're still getting a 4% 5-year growth rate. I really like that. The dividend's been growing for the last 7 straight years, and I think they've been making payments for even longer than that as well. Yeah, so they've been making payments to the dividend for the last 25 years, which I think is maybe where they first went public. I'm not 100% on that. They did cut their dividend back in 2008, 2009 during the great financial crisis, and kept it steady for a while, but they started growing it again, looks like back in 2016 there. So anyway, I like KRC. I hope time will be nice to me, and I hope this one ends up working out. You never know what's going to happen. I could be wrong on it, but yeah, it's one that I'm really liking. I see a lot of growth in the company. It still seems like they're firing on all cylinders despite the multiple headwinds facing them. That's not to say they won't have tough times, but I do believe that they're well positioned to soldier on through those tough times and emerge the other side still a strong company. At least that's what I'm kind of banking on. But anyway, guys, moving on to this third and final company. This is one of my favorite high growth dividend stocks. This one is going to be Snap-on. And let's go back over to the screen here. Take a look at Snap-on, guys. So this company just does not miss. Okay, as far as their earnings, they beat by 7 cents per share. Revenue was up 5.2% year over year. They beat it by 20 million. So Snap-on looked really, really good. And instead of like sharing some of my brief high level notes, what I actually want to do is go over their presentation from the earnings call and just look at some of the numbers. I want to show you guys how the revenues trended year over year, the profits, the operating income, and the free cash flow, and even the debt. Because year over year, this company is just looks even better today than it did this time last year. So let's go back over here. We're going to go over to their presentation. Hopefully that is big enough for you guys. We are here looking at their consolidated results. Let me see if I can zoom in just a little bit, make it a bit bigger, so it's just easier to see for you guys. That looks pretty good there. So we can see, let's look. I mean, right here, we already know their revenue climbed, 5.2% year over year, went from 1.1 billion to 1.16 billion, let's say. Profit margins expanded as well. So this time last year, we were looking at a 48.3% margin, which is still pretty nice. And now it's sitting just a hair below 50%. So that's looking really, really, really strong. They did have a little bit higher operating expenses as a percent of revenue this quarter compared to this time last year, but still the operating earnings came out a bit stronger year over year overall. And if we go back down even farther and take into account their financing services, looks even better. So on a consolidated basis, things look good there. We won't go through each segment, but just so you guys know too, I mean, commercial and industrial, C&I, their tools segment, and their repair systems segment also saw increases just pretty much all across the board. Now, if we go over here to their cash flows, okay, let's look right here. So look at the difference in cash flow year over year. So in the third quarter of 2022, they brought in about $72 million in free cash flow compared to this quarter. We tripled that. Okay, $225 million of free cash flow. Quite a big jump compared to this time last year. And if we look at the difference, the year-to-date difference between these two, it's basically doubled. So $321.5 million year-to-date in 2022 compared to $630 million here in 2023. So that's looking really good. Increased their cash position overall by $88 million. And if we look at the balance sheet, we'll even see, if we look at the net debt right here, on a net basis, the debt's basically been cut in half compared to this time last year. So this time last year on a net basis, debt was at about $444 million compared to right now, it's at $242 million. So that's looking really solid. And like I said, Snap-on just doesn't miss. This company looks better today than it did this time last year. And this is actually one of the only one that we've looked at so far today that's actually up this year. And if we go over to Seeking Alpha here, we can see that, guys. So in the last year, they're up 18%. Year to date, it's 10.5%. In the last month, they are down a little bit, but not nearly as bad as many of the other companies out there. So the share price has held up really well, which is kind of a weird, this is kind of a weird thought, but I was really hoping just there would be something to bring this one down because I really like this company. It just seems like it's one that is always on point, never misses, and it's one that I'd like to make a bigger portion of my portfolio. And maybe I'll bite the bullet and do so, but I'm up quite a bit right now, and I'll actually show you guys my Snap-on position. I'll even show you my KRC position while we're at it, because I meant to do that a moment ago, but I did not. But anyway, Snap-on, not a huge position. I have just about 9 shares at an average cost of $211. So the share price right now is quite a bit above my my cost basis, which means that I'm up about 19.5% in terms of share price, about 24.4% if you include dividends in the calculation on a total return basis. The same is not true if we look at KRC. So with KRC, I'm down about 26%, 26.3%, down 21.7% on a total return basis. So KRC position is not looking great. In fact, a lot of my positions right now in terms of share price and some in terms of total return as well are really not looking that great. But anyway, guys, I did that whole thing and didn't even put it on the screen. I'm sorry. Here. Sorry about that, guys. I really try and be careful to not do that, but that's just what happens when you go live, guys. Really anything could happen. You guys get to see me raw, unedited, cold classic, red, white, and me. And anyway, here's where we're at. So Snap-on right here, like I said, up 19.5%, 24% total return basis. KRC, complete opposite, down like 26%. But still holding strong with it. And with that said, guys, those were the three stocks that I wanted to get into with their earnings. A couple of ones that I considered covering tonight were popular stocks like Intel and AT&T, who also put out some pretty strong earnings from what I've seen, but I have not had the chance to go through those companies' quarterly earnings yet. So I don't want to talk about them at any crazy length without first going through the earnings and at least becoming familiar with what's going on. So in case you guys were wondering, why didn't you talk about Intel? Why didn't you talk about AT&T? That's why. I just haven't had the chance to go through their earnings yet. But that's something that's on my to-do list. Maybe next week. I don't know if we'll do another one of these videos next week, talking about earnings or something. But if we do, maybe I'll include those in the mix. But anyway, I want to put it back on you guys real quick and ask you, which quarterly earnings are you most anticipating? Or even so, just kind of an asterisk in addition to that question. Which ones that already came out were you most pleased with or most disappointed in? So let me know what you guys think, just overall in terms of the earnings of the companies that you have in your portfolio. I'd be curious to know what you guys were looking at, what you were happy with, what you were disappointed with. Let me know all of that. So anyway, I'm going to see what I missed in the live chat here. Take a swig of my marg. Let's see. Oh my gosh. Nice, Riggs. Good to see you, man. Ooh, this is a good question. Is it Rollins or is it Rollins? I don't know. It's probably Rollins. I'm probably saying it a little bit wrong. It's like saying Berkshire when it's, Berkshire. So maybe I'll start. Maybe I could be better about that, Jim. Rollins. Anyway, yeah. Luis says we all have our own KRCs in our portfolio, like that X that we cannot let go of sometimes. There you go. Sharon says you're not alone, Ryan. It's just another stage in the cycle, and you'll be happy when we get out the other end. Oh yeah, like I said, I'm not tripping at this point. All the companies most of the companies I own, I feel pretty good about. There's a couple that are questionable that I'm kind of keeping my fingers crossed with, but overall, I feel pretty good about where the portfolio's at. At some point, I'm not in necessarily any rush to do so, but I'm starting to piece together some of the companies that I would not mind getting out of at some point. Not in any rush to, but the ones that I'd like to consolidate out of a little bit more. So that's something I'm kind of looking at and chewing on as well, and we'll probably do so when the time is right. And this is a good question, Anthony. I was actually just, as I'm over here looking at my spreadsheet, Chevron had a crazy drop today. I'll show you my Chevron position. It's still looking really good. But let's go over here. So Chevron is still looking pretty good in my portfolio. Yeah, that's pretty zoomed in enough. You guys can see that. So you can see right here, for Chevron, I'm still up 54% in terms of share price. With total return, it's up 70%. So that's looking really good. But interestingly enough, I'm just now seeing this. Chevron is at their 52-week low. Okay, but my average cost is still so much lower than the current share price. $93.50. Wow. Interesting. So let's see, what other, so AbbVie had a really big drop today, down 4%. Chevron down almost 7%. Intel carried my portfolio today, up 9.3%. Would not be at all upset if that trend keeps going. Pretty much everything was in the red today, guys. I mean, really with the exception of Intel. Williams-Sonoma had a decent day, but Williams-Sonoma has actually been coming down somewhat recently as well. So they were up to about $160-ish per share. But you can see they're really starting to make their way back down. So just in the last week, they're down 6%. They were up about, let's look at the last month actually. So they were at the high of 163.5. Now pretty steep drop here. And I'm not even sure exactly why that is. There wasn't really any news that indicated why they might have seen a sharp drop. I'm sure it's just some macro stuff. Definitely not company specific, but anyway, that's what's going on. Okay, so looking at your guys' responses, so MPW, Dorte, I don't know if you're I'm guessing you're anticipating that one. Brock says opinion on SCHD right now. Yeah, so I'll just give my quick opinion on SCHD. Where do I start here? With SCHD, it's really not one that I've been keeping close tabs on. Okay, I'm buying SCHD every single week. I'm dollar cost averaging into it, and I'm dollar cost averaging into VU. But I'm not really looking at what SCHD is doing on a daily or a weekly or even monthly basis. I think I'm down on my position right now, but from a long-term perspective, if I look at what the fund looks like 5 years from now, 10 years from now, 15 years from now, I think it'll look better than it does today. And that's really just what I'm keeping in mind and how I'm looking at it. Outside of that, I don't spend too much time keeping tabs on SCHD just because it's designed so you don't necessarily have to do that. So, but overall, still bullish on SCHD, still really liking it. I think the yield is up. Actually, I think Russ shared this earlier today in our group chat. I think the yield is up close to 4% right now, so that's pretty pleasant. Kevin says, pretty pleased with IBM in Stanley Black & Decker. That's great. Yes, Stanley Black & Decker is another one of those that's really just seems like a stock that has not been able to catch a break for quite a long time. Let's actually take a look at their share price performance because I haven't done so in a while. But this is a dividend king, okay? And historically, it's been a rock-solid company. But that's kind of interesting to see. In the last year, they're up 8%. Year-to-date, they're in the green. That's great. Then the last month, they're down. But it looks like they really popped after earnings. So they must have, rises after quarterly earnings beat. Well, that's good to see. I'm glad to see Stanley Black & Decker doing well because it is a really solid company. And just looking at their dividend stats, guys, holy cow, look at that. Don't take that at face value. I'd be surprised if, and I could be wrong because I haven't looked into it, but I'd be surprised if that was actually the case. But anyway, otherwise, 4.2% yield, about very similar 5-year growth rate, very moderate growth rate, and 54-year dividend growth streak. So that's really solid. But what's going on with this payout ratio real quick? Let's look at maybe they just had really low earnings at some point, earnings per share. Yeah, so this is where it's at. Well, no, because that would make the payout ratio negative. So, I don't know. This is the only reason I could think this negative 38 cents in the trailing 12 months would be the only reason I'd think their payout ratio is so wonky. But I really don't know. Huh. Very interesting. Otherwise, though, historically, the payout ratio has not been too bad. I mean, at the highest over the last 10 years, it's been about 63%. But typically, it's like 44%, 29%, 36%, 34%. So it's usually looked pretty good. But I'm wishing well for Stanley Black & Decker. I hope that company, keeps going up. So, there we go, Osvaldo. You done did it, man. Have any books you suggest reading for beginners? Boy, do I. Let me share a couple with you. So, and I'm so sorry for those of you who've seen me do this like 1,000 times. I get really excited when people ask me about investing books because I feel like I got some good ones to share. So, let's see, Osvaldo. Okay, this one. Bear with me one moment. Yeah. Yep. Okay. Gosh, I keep finding good ones. Okay. 1, 2, 3, 4, 5. Okay, I've got 5 here for you. This is in no particular order, by the way. But these are all ones that I would recommend for beginners. And I just finished reading this one the other night. It's called How Do You Know by Christopher Mayer. And Christopher Mayer is also the author of a book called 100 Baggers, a pretty popular investing book. But I just finished reading this, and I thought it was really good. The subtitle of it, so the title is How Do You Know? The subtitle is A Guide to Clear Thinking About Wall Street, Investing, and Life. So I think it helps you. So in this book, we'll ask the question, how do you know? In this book, we'll ask that question often and in different ways. And the whole premise is like, how do you know that what you're looking at is good information? How do you know that the stock you're looking at is a good investment? How do you know, how do you differentiate between what's fact and what's just an inference, So there's just so much, like, how do you know? Should I say it one more time? But anyway, good book to read, pretty good for beginners, and I actually think it's a good one to have for beginners because um, I think it helps frame your mindset for when you're looking at information. And there's just, there's so much information out there. There's an endless supply of information and opinions on investing. And so because of that, because there's just so many different opinions and things that you can refer to, and which is great, but it just helps you keep in mind, like, how do you know? I guess it just teaches you to take everything with a grain of salt, supposedly. And by the way, like, this is also goes without saying, but the same is definitely true when it comes to YouTube videos, especially mine. Like, at the end of the day, I really enjoy doing this, but at the end of the day, it's important to remember that I'm just a guy who's learning about this stuff as he goes, and definitely don't take the things that I say at face value. Definitely verify. Definitely take it with a grain of salt. As they say, not investment advice or not financial advice, whatever. It's true. It's cliche, but it's true. I could probably be better about reminding everyone of that. But just remember, at the end of the day, I'm someone who's learning about this stuff as I go. I'm no expert. I'm no guru. I'm just a guy who's an enthusiast and wants to share what he's doing and hope that it inspires others to get started. But anyway, moving on to this next book, I think this would be great for beginners. Even if you're not a beginner, even if you're someone who's been investing for a while, for a few years, this could be a good read. It's called Fantastic Moats and Where to Find Them. And it helps you identify different competitive advantages when you're looking at businesses. And it covers stocks like Coca-Cola, AbbVie. What else we got here? I think Intel's even in there, Altria Group, Walmart. So it just kind of talks about different competitive advantages and what to look for. And this is a very easy read, by the way. I read this one it's only 160-ish pages. I probably read it in 3 hours. Like, the words are really big. So a very easy book to read. This next one, I'm sure a lot of you guys have already read it, The Psychology of Money. Classic. I know it didn't really focus in there, but this is definitely a must read if you're getting into investing. It just really helps you, kind of changes the way that you think about money and maybe how one should, and how many don't. But anyway, another book. This one will get you stoked about investing. This is Richer, Wiser, Happier by William Green, and this is hands down one of my favorite investing books. It's basically the author detailing different interviews that he's done with some of the world's famous super investors, guys like Charlie Munger, Monish Pabrai, Guy Spear. Who else we got here? There's some other good ones in here. Nick Sleep, Carl Vanderberg. Anyway, some other names that you would definitely recognize. But yeah, I highly recommend this one. And then these last two, we got The Tao of Warren Buffett and Warren Buffett in the Interpretation of Financial Statements. And if I had to recommend just one book for people who are just getting started with investing, it would be this one right here, Warren Buffett in the Interpretation of Financial Statements. This book, it basically gives you a rundown of how to read financial statements. It's a great place to start if you want to learn about how to do that stuff. And if you're going to be investing in individual stocks, I think you should make the effort to try and learn how to read financial statements. It's not something you'll grasp overnight, obviously, but this book it's been really helpful. And each chapter is only a page or a couple pages long, but it takes you line item by line item in each of the financial statements. This is something that, for me, not having any background with this stuff in finance, this has been a really invaluable resource to me, and I've learned a lot from reading it. And one thing that I do every day, because it's such an easy book to read, I'll just read a chapter every single day, and I'm just going to do that in perpetuity. And I'll go through the entire book, start it over from the beginning, and just continue learning about how to look at the financial statements, and hope that it just sinks in with repetition. So I'd highly recommend this book. Great book. And then this one right here is The Tao of Warren Buffett. It's by the same authors as the financial statements book. This one's also a very quick read. I also read a page out of this one every day. And it's just different quotes from Warren Buffett over the years. So it gives a quote, and then it kind of breaks down maybe what he meant by it and how you can apply it for yourself. So those are all the books that I'd recommend for beginners who are just kind of getting into investing. And also anyone who's just looking for a generally good read, I recommend this one right here. I just started reading this a couple days ago. This is The Snowball, just a biography on Warren Buffett, by Alice Schroeder, who I believe used to be an analyst for Berkshire Hathaway. So she was very familiar with the company and spent a lot of time researching it. and wrote a, was fortunate enough to follow Buffett around and get into his personal life and wrote a biography. And this one's a mission, guys. This one's over 700 pages long. But like I said, it's a really good read, and I think you guys would really enjoy it. I just started it a couple days ago. I'm about 100 pages in so far. It's been a hard one to put down. But anyway, those are all the books that I'd recommend for beginners. And I'm so sorry to spend so long talking about that, but I really like talking about that. So let's see. Adon here says, this is a good question. Has Williams-Sonoma seen a lot of retail theft like Target and the others? I mean, I'm guessing they have some, but at the same time, Williams-Sonoma, a lot of their products are big, like bed frames, couches, chairs, tables, stuff like that. So they're kind of hard to steal. And at the same time, I think something like 65 to 70% of the company's revenue these days is coming from online sales. So a lot of times customers will order online and they'll either pick up in store or they'll just have it delivered to their home. So because of that, I don't think shrink in retail theft is as big of an issue for Williams-Sonoma as it would be with other retailers like Lowe's and Target. But yeah, I'm sure they still experience it. So hey, guys, I got to keep working on this margarita. Let's see. Guy here says, I feel good with the recent companies I've been buying. Starbucks, Visa, MasterCard, Microsoft. I'm searching for companies with high return on capital. Return on capital employed and extremely low payout ratios. There you go. Let's see. Jim says Stanley Black & Decker was up 6%. New York Community Bank down 6%. No real downgrades to speak of. Okay. PX Late D. Hi, Ryan. Always late to these type of streams. Thank you for your content. Thank you. I appreciate you tuning in, and I hope you guys have been enjoying this stream. It's about 6 o'clock, but I got a couple more things I want to share with you guys, so I think we're going to go a little bit longer tonight, just a couple of minutes, which means probably 10. But Cyrus here says, yeah, I watch him on the treadmill as often as he releases videos. Okay, so on that note, guys, I want to talk to you about something. So a lot of you guys, if you've been tuning into these Dividend happy hours over these last few weeks, you'll have heard me talk about a new live stream series that I'm coming out with. In case you haven't, and this is news to you. So for the entire month of November, starting next week, I believe the first is Wednesday or maybe next Thursday. I don't remember, but well, I think it's Wednesday. I think it's Wednesday. I don't know, but starting next week, I will be doing a Monday through Friday live stream. It's not going to be a full hour, but I'll be streaming starting at 7 a.m. Pacific time, so that's 10 a.m. Eastern time. So it's going to be in the morning, 30 minutes after the market opens. I'll be streaming Monday through Friday, and I have a name and everything for this new live stream series. But the gist of it, and I don't know if you guys can see this right here. See this little orange thing? So this is actually a walking pad, like a little treadmill that I recently got. And what I've been doing lately is I've been just putting this treadmill up here at my desk. As I'm working, I'll get my steps in, I'll walk. I have a standing desk here. So I'll raise it up, walk. When I was listening to these earnings calls earlier today, I was walking, got a couple miles in just listening to earnings calls and taking notes here. But anyway, I've been doing this every single morning. My mornings have been starting out, getting some steps in, walking on the treadmill for a little bit, catching up on the stock stuff, seeing what's happening in my portfolio, reading some articles, just kind of getting the day started with that sort of thing. And so I just decided, I'm going to start live streaming that. I'm here doing this. I might as well share it. I might as well hop on and hang out with you guys and see what's going on with you as well. And so that's something I'm going to start doing next week. I'm going to try it for the entire month of November, see how it goes, and then go from there. So if the stream is fun, if everyone enjoys watching it, enjoys tuning in, then it's something that I'll keep going. But if it's something that's lame and not a lot of people are interested in it, then I'll probably just chalk it up to not a great idea. But anyway, I'm going to do that for the entire month of November. Like I said, Monday through Friday, starting 30 minutes after the market goes open. And there's more to this more to the idea that I'm sharing here, but you guys will just have to see when the stream comes around, I guess. So let's see here. Let's keep going here. Okay, so Pizza Pro, similar to the books, my mom's friend wants to start investing for her 13-year-old kid, but they don't have any experience in investing. Videos or recommendations? I mean, I think it would be good to just your mom's friend, just have her, just, I don't know, just soak it all up. Just start watching this stuff. If she's interested to learn about it, just start watching this stuff. And through osmosis, through watching different creators and getting different feedbacks and different takes, different ways of doing things, she or they will, they'll come to grasp some of this stuff and they'll get an idea of where to start. I mean, as you guys know, I for someone who's just starting out, I'm a pretty big proponent for ETFs, and I definitely, in fact, for a lot of people who just want to be hands off and maybe don't want to learn about this, ETFs are just a good way to go. So I don't know that I have any specific video recommendations, but that's where I would recommend. I don't even want to recommend. That's what I think makes the most sense for someone just starting out who wants to get some skin in the game but doesn't really know what to do. Just go with ETFs. Just go with the indexes. Some VTI. I think you can't go wrong there. You could just have your entire portfolio be VTI. You could do what I do, which is SCHD and VU. You could do VT. You could do DGRO. There's so many great ETFs out there that I think are suitable for someone just starting out, and also make sense for a 13-year-old kid who has a very long-term time horizon. So let's see. Let's keep going here. Okay, so that was, anyway. Will, are you still investing in these market conditions, or are you holding off? No, I'm still investing every single week. Yeah, still investing every week. This week in the main portfolio, I bought Johnson & Johnson and Lowe's. And in the Roth IRA, I just bought some more SCHD and some more VU. So let's see. Yeah, Jim here says Williams Sonoma doesn't get hit as hard as, say, Walmart or Target, since I think most are embedded in malls. Yeah, that's true. I mean, Williams Sonoma does have some outlets, but yeah, they are more so in malls. But I feel like there was something else I wanted to share with you guys. I'm not exactly sure. But I think this is probably a pretty good place to wrap it up, unless you guys have any last questions for me. Anything else before we sign off? I feel like there was just one other thing that I wanted to share with you guys, but I do not remember. Wait to see what happens in the live chat here. Okay. Well, I think we are good to go. Okay. CAs, this is a good question. What are your current thoughts on T. Rowe Price? T. Rowe Price, great company. I actually talked about it. I talked about it in last month's video. I talked about it briefly in my video that I put out on Wednesday, talking about like the best, discounted stocks in November. But yeah, I think T. Rowe's a great business. They're down right now. When share prices go down, T. Rowe typically takes a hit. I mean, obviously, but because they are an asset management company, their assets under management decline when the market overall is going down, which does have an impact on them, and they don't generate as many, I guess, as much in revenue when that's down, because the assets under management are down, and their fees I think are based on assets under management. So yeah, that's why they're down. But overall, pretty solid company, really killer dividend stats. From what I remember, the company doesn't have any debt on the balance sheet, so that's pretty good too. Yeah, Adon says you'll think of it at 11 p.m. when you're trying to fall asleep. Yeah, absolutely. Look, man, why did you get out of your 3M position? Well, yeah, I don't know. I would just go. I don't mean to be like this, but I would just go watch the video where I talked all about it. In general, I just felt like I could put my money elsewhere. I'm kind of sensing a dividend cut on the horizon for 3M, and so I just kind of wanted to get out while I could. But I talk about it more in my video. If you just go to my channel or just type in like I just sold this Dividend King or something like that, you'll find that video. So let's see here. Okay. Wow. Jim, 149 people watching, 99 likes. Made the fleas of 1,000 camels infest the armpits of the 50 that haven't hit the like button. Wow, okay. Yeah, guys, hit that thumbs up if you're still here. Jake says, good time to buy Ford or Bank of America. I can't really say. I think I haven't looked at Ford, so I really can't speak on Ford, but I know Bank of America's been down quite a bit. I'm not saying whether or not you should buy either company, because that's totally up to you, but I do like seeing Bank of America at this price point. Like I said, I have not looked at Ford, but I do like seeing Bank of America where it's at right now, and I think that's a good one to buy and hold for the long term. There's my mom just in the nick of time, right as we're about to sign off. Hey, Ma. But anyway, guys, we're going to wrap it up here. We are going to close out. Oh, nope. False alarm. Caleb with a good question. Ryan, any new stocks that you're looking at? Yes, I've got a few. Let me see what's going on my watch list. I mean, Rollins is one Rollins is one that I've had my eye on for some time. But I also just added where is it here? I also just added AWR, American States Water Company, back to my watch list. This is a company that I actually used to have back in the day. And it's a dividend king. They've been growing their dividend, I think, for 68 or 69 years. Pretty nice dividend growth rate, up in the 9% range. Their yield is a bit on the lower end, though. I think 1.6-ish%, kind of similar to what you'd find with Rollins. But AWR, really steady water utility company. They service a handful of military bases around the United States, so I think those are pretty good customers to have. Utilities in general have been pretty beaten down this year. AWR is no exception. And this is one that historically, is at a premium, and it's possible that it still is. I don't know yet because I haven't what am I talking about? I have not dove deep into it lately, so I need to do that. But yeah, AWR I think is looking pretty good. You guys already know about Rollins. I talked recently about Norfolk Southern. That's one that's also on my watch list. And just kind of a sidebar too before I sign off. One thing I've been doing lately, guys, is I've been binging the Berkshire Hathaway annual shareholder meetings. If you go to the Apple Podcast, they have them all listed there, pretty much all years back to I think the early 90s. So I've been listening to all of those, and I listened to, I think I'm in 1999 right now, the afternoon session in 1999. And Warren said something, I'm going to paraphrase it, I'm not going to get it quite right, but he said something to the extent of, we don't look for businesses that will benefit from change. Instead, we look at businesses that will continue to generate profits and continue to grow without changing much about the business. And when it comes to the companies that I've tried to keep that in mind. That's something about that really jumped out to me. And so I've kind of kept that in mind when looking at adding things to my watch list. And I think companies like Norfolk Southern, I think AWR, AWR, check that box. I think Rollins does as well. And with that said, I meant to say this earlier about Shutterstock, but with that in mind, I actually just removed Shutterstock from my watch list. The more I thought about that company, the more I just did not feel confident in investing in it. And that's maybe something I'm wrong about. Down the road, we'll just have to see. But I just ultimately decided, even though the dividend growth rate was nice, even though it's super discounted, even though it's seeing really nice growth on the top line and the bottom line, and there's negative net debt, there's a lot to like about the company. But overall, it still wasn't one that I had a lot of confidence in. So yeah, I ended up passing on that one for now. I just wanted to share that. And I meant to share that earlier. But anyway, guys, we are really going to wrap it up here, I promise. So I want to thank you guys so much for tuning in and hanging out with me for this last hour and 8 minutes. And also be sure to check out this Sunday's video, guys. This Sunday, I'm going to be revealing my dividend income for the month. And let me tell you guys, it was an incredible month of dividends. Okay, it was really cool. And so I'm excited to share all of the dividend payments with you guys. So definitely tune into that, and definitely leave me a comment below. If you watch that video, please leave me a comment, say what's up. Let me know, let me know about your dividend income in that video. I'd be curious to hear about it. But anyway, guys, I hope you guys have a fantastic weekend. I'm not talking straight tonight. I'm just like not on it. But anyway, guys, I hope you have a fantastic weekend. Thank you so much for all the support. Thank you so much for tuning in. And I hope you guys have a fantastic weekend, and I'll see you on Sunday. You better be there.